So welcome to June 6th, the trade review. Today's trades were not very, not too exciting. Only one opening trade here today, but we'll take this opportunity to talk about the portfolio and the philosophy around my portfolio in general. So I did open one strangle in XOP. This was a 44.37 strangle. We'll go ahead and duplicate that order. Market is active right now, so you'll be able to see things move around a little bit as we go and as we talk about it. And as you can see here, my strangle was at $44 and $37. So right around the expected move, a little bit beyond this expected move of the stock price. And you can always tell what the expected move is for that expiration by looking at that copper strip that runs down the vertical center line of the screen there. So you can see here it's saying the expected move is just a bit above 38 and right around 44 there. What you'll also notice when you look at this is I have an existing position already on XOP. I have another strangle at 38 and 45. And this is something that I like to do in most of my positions is I don't want to put all of my eggs into one basket. And what I mean by that is I don't want to time all my entry, all my size in that position on the first entry. So I placed this position a couple of days ago, opening that into XOP for the July cycle. But you don't know if XOP is going to have a big move the day after you place the trade, or if implied volatility is going to spike up the day after you place the trade. So as I'm going through, I want to, not in too long, I'll do this over the course of a week or so, but I want to enter into that position, maybe twice, maybe 3 times, because if I'm keeping my characteristics the same, my delta target, my my profit window target, if those are all the same, it should start to form a nice little normal curve or kind of a nice rounded profitable window around that stock price. So to illustrate that, let's go ahead and go into my portfolio view here. And let's go find XOP in this growing list of positions. So here you go. And I'll expand this out so you can see the individual legs. So we have here a strangle, but you'll notice the strangle's shoulders, I guess you would say, are a little bit rounded. And the reason for that is I've already pre-grouped those now 4 different legs, those 4 different strike prices, into 2 separate strangles. So I'm going to guess which one is the first one here. I'm going to guess this is my first position I entered. You can see it's nice and wide. And then I added a second one on there. And if you just kind of notice here, when I toggle this on and off, how it moves my, clicked it too quickly, double tapped. It'll kind of move my profit window. Come on, man. Sorry about that. To where it rounds the shoulders. It puts in 2 different positions, 2 different spots, 2 different strike prices where the position starts to become, sloping down to the negative side there. So with it just being 2 different strangles, really just $1 apart in the legs, not going to be a huge difference you see here. But what's nice is that I'm now able to set up 2 separate working orders to where I'm managing each entry point individually of each other. They both have the same rules, the same management techniques. I'll be able to kind of look at this position and say, okay, this strangle is doing fine. That strangle is doing fine. And manage them individually, but reduce, or I guess I would say spread out that risk of a bad entry over time by placing smaller trades more frequently in that position. And this being simply a $40, $41 stock, it definitely does lend itself to laddering into the position over the course of a couple of different entry points. So that was the only opening trade I placed today. Since we've got some time and since I didn't have a whole lot of activity, let's go ahead and just take a look at the portfolio as a whole. So I've just gone ahead and clicked on all of my positions, and you can start to see them building out here. Now let's just look at this portfolio altogether. And my goodness, something has changed even in the last few minutes. So Tesla is on an absolute rampage. Let's go ahead and look at Tesla. So I placed Tesla. Let me go ahead and find my Tesla order. Oh boy. So I placed Tesla, honestly, just 2 days ago. And I place a very neutral iron condor in that position. But as I look at it now, almost already in 2 days, my short call side is being tested. It means the position is just rallying like a monster at 9% today. And what that means, what is 9%? gosh. I mean, look at this 1-day chart here. So doesn't really give me any reason to worry. This is a defined risk trade for the first, on the first point, and I believe it's only a $10 wide trade. So the max I can lose on this trade, I can just recreate it here. Max I can lose is around $700. So if it continues to skyrocket upward, no harm, no foul. That's why we define our risk on some of these trades, with especially volatile stocks. But also, another reason why I'm not worried about this is let's go ahead and take a look at Tesla. And let's see what this stock tends to do. So this bar right here, which is what we're experiencing right now, especially today, looks a lot like this one. And what happened a few days later after that big move up? It moved back down, and then it moved back up, then it moved back down. So with the beauty of delta neutral trades, we always give the stock time to work itself out, to go up and to go down and to eventually fall into our range. If time gets short on us, which is nowhere close to being short right now, we have 44 days to go. But whenever that time does get to here, and we have maybe 20 days left to go, maybe 15 days left to go, we can look to roll that position out in time to give ourselves more duration to be right and to pick up credit all along the way, which will increase our break-even points and just give us a higher probability of making money at the end of the day. So if you look at the rest of my positions, except for Tesla, let's go ahead and make this guy a little bit smaller. So we've got our position in Apple here. This looks like it's an iron condor. You know what? I do want to see. I like when I'm scanning through my positions, I definitely enjoy seeing the position visually. So in Apple, we've got an iron condor that's just doing its job. It's slowly making gains there. Our Disney position, it's down overall. It's down a fair amount overall. But again, our position is nicely in the middle here. So I've got no reason to worry. Just give that time as well. EEM has had another big move up. So you can see it's starting to test my upper strikes there, my call strike there. Not worried yet with it being still 44 days left to expiration. I don't want to over-manage the position and take action too quickly, so I'll just sit there and watch. FXE, if I don't get too click happy, is also on its way up. Everything seems to be drifting up, and you can tell that, especially when you look at my overall portfolio delta of -68. So in time, I'll want to manage these individual positions to reduce the delta exposure of each position. And I'll talk to you about how I do that when the time comes. On gold here, it's doing what it needs to do, slowly working. IWM is, again, a lot of these positions are showing a paper loss, but I'm not worried about them because they're just moving in that range that I'm allowing them to move in. So when you're placing positions, especially how I've placed positions very quickly in quick succession, I kind of put on a rapid fire amount of positions, you open yourself up to the risk of those big moves moving all your positions all at once. And that is one of the just things to keep in mind about delta neutral strategies is just don't overreact too much. These things happen, but also it motivates you to spread your entries out over time. We talked about this position yesterday, the SMH combination of iron condor and iron fly. We're going to go and just move past this Tesla because I'm losing $100 on this position alone today. That's definitely, it's making up half of my loss for the day. No worries. USO is doing what it needs to do. XLE is doing what it needs to do. XOM is caught up in a little bit of that upswell, 1.6% up today, but that'll probably come back tomorrow. And XOP as well. So nothing to worry about. This is part of the game. It's why we do what we do. And if you look at my overall probability of profit, it's still showing an 87% probability of profit for my overall portfolio. No need to worry.